Hey traders, welcome back. Just wanted to post a quick update video on today's price action and market analysis for you guys, as we have seen quite a bit of volatility over the last few days. Just looking at the daily time frame here, as we can see, Bitcoin's price has been slowly grinding down for the past week or so. We do now find ourselves in the $65,000 range. Big wicks to the downside, big wicks to the upside, very non-committal bullish price action. And the thing that concerns me is that again, any of you who have studied technical analysis knows that one of the basic tenets of TA is that volume confirms trends. It's one of the 6 tenets of the Dow theory of technical analysis, which is the foundation of modern TA. And what we're seeing here is volume increase on bearish movements and decrease on these bullish corrections, meaning that the primary movement or the current trend is bearish. The bullish movements are corrections within that trend. We haven't seen any conviction from the buyers. And unfortunately, even though we had a great push to the upside here, as soon as the New York session opened, oh, by the way, this bullish movement let's actually get over to the primary chart here. Let's get rid of the Bollinger Bands here for just a second, and let's look at market sessions. So as we can see, obviously yesterday was Juneteenth, a bank holiday, so we didn't actually have a lot of trading activity yesterday, just as I expected. But then as soon as the APAC market opened up and the UMA, I mean, they were buyers, right? They bought. But towards the end of the UMA session, or about halfway through, they sold all the way down to support. And New York, I mean, this kind of coincided. So as we said, on federal bank holidays, regular traders are typically off. But when they come back the next day, man, they come back with a vengeance, and they pushed price amazingly down. Now, we have found some support here at the same level of support that we found. But again, very similarly, just looking at volume here, we can see, again, of course, the low volume in this area. But again, we see the volume increasing on these bearish movements and decreasing on these bullish retracements. All right. Now, we were able to push price all the way back up to the 1 hour 200 exponential moving average, which is going to be the 4th test of this resistance level so far. But again, unfortunately, it's a declining resistance level. Now, looking at the Bollinger Bands here, of course, we can see that volatility expanded over the hourly time frame as APAC and UMA pushed price up to that 1 hour 200 EMA, as we talked about. Now we are in a wide volatility range. Volatility is high, but the trading pretty much for the majority of the American session today has been relatively boring. Again, of course, this was a nail biter for most people, but so far we just kind of have a double bottom here at support. So we have this established support at 64.6 essentially, right? 64, and we can even go down to 64.5. We have already deviated below this low on that nail biter that we had a few days ago. But for the bulls right now, this is kind of the last local area of support. And following this, we're really not looking at support all the way down to 60,000. So this is the last stand for the bulls. We do need to see buyers step in right here, right now. Again, we've already deviated below support. We've already cleared so many long liquidations that I'm really not going to be listening to anything that's like, well, we could buy at 62. We could buy at 60. No. Listen, if we don't hold these levels, if we don't really genuinely hold 65, and it's okay if we go down to 64 and wick down and come back up, that's completely fine. But if we close below these lows, then it's probably over for the bulls. All right, it's probably over for the bulls. Now I am in a long position. All right, so I'm holding on with you guys, but this is going to be my signal to close. All right, my stop loss is at 63,800, and if my stop loss gets hit, I will simply be out of the trade. I have been sitting in cash. Like, bigger picture here, of course, I've been telling the followers of the premium trading group, and now, of course, the crypto trading academy, that I've been sitting in cash for over a month now. So I am out of the markets, guys, out of alts, out of BTC. I'm in USDT, and I think everybody else would probably be too. This is not the time to be loading up spot Bitcoin. This is not the time. This is potentially the time to begin considering loading up on DCA altcoins. But I would really pause and see what Bitcoin is going to do. Of course, we are entering into a potentially lucrative area with altcoins. This is the alt season indicator. We can stretch this all the way back, and we can basically see that anytime, and what this basically, just very simply, what this measures is it measures the profitability or the returns of the top 50 performers, right? 90-day moving average relative to Bitcoin, okay? Relative to Bitcoin's price. And as we can see, when the price performance of altcoins is outpacing the returns of Bitcoin, that increases exponentially, and we get altcoin season above 75, the euphoria phase of the market. And of course, below 25, when it's Bitcoin season, altcoins are completely crashing while Bitcoin is doing well. That is what's happening right now. Bitcoin is doing well, superbly well relative to altcoins, because they are falling out of the bottom. You can look at Solana. Of course, XRP is a stable coin, so it's going to XRP is not going anywhere. It's at 50 cents now. Is it 50 cents a year ago? It's going to be 50 cents a year from now. We can see Dogecoin falling out the bottom. TON obviously diverging. ADA, of course, falling out the bottom. Shiba Inu, Avalanche, TRX. I mean, everything, just about everything is reaching new yearly lows and doing quite poorly. Now, of course, if we follow the alt season indicator, then we are coming upon the best time to begin to accumulate altcoins for medium to long-term positional trades, holding times of 1 year to 18 months maximum. That's how I trade altcoins. They're not investments. We don't invest in altcoins around here. We take trades. All right. But if we pay attention to every time that the alt season indicator is registered something this low, it was always about a month or two until we actually started to see price discovery. And with Bitcoin holding on to the ropes here, potentially looking to plunge down to 60,000, maybe even really much lower, 55,000, really much lower, Justin, really? 55,000, 50,000, something like that. Then we probably want to hold off on accumulating altcoins right now. All right. You have two options when it comes to altcoins right now. If you believe that we're going to continue on the cycle in 2025, which I do believe. All right. So I am looking to position in altcoins, but I want to do it at the right price. Then you can either start DCing into altcoins and just be comfortable with the fact that you're going to have to be able to stomach 30 to 50% additional drawdowns. Okay. I don't like the sound of that. Or you wait until a clear reversal signal on a higher time frame, like the weekly time frame. All right. And then you begin DCAing it on the way up, which I believe is the best way to do. It's always better to add to a winning position rather than add to a losing position. And of course, yes, of course, that doesn't mean you get the lowest possible price when you pick the right ones and you DCA in, but you also get to avoid buying a falling knife, which is the worst thing in the world. And the reason I would say 80 to 90% of traders get wrecked is because they try to buy falling knives. So I want to focus on some more short-term stuff here, looking at the footprint chart and looking at the large limit orders for Bitcoin. This is coming from CoinAnk. This is the large limit order that I've been focusing on. There is a significant amount of liquidity. There's about $15 to $20 million in aggregated liquidity here in large limit orders. All right. These are not orders that have been spoofing. They're not pulling on and off the books. These are serious orders through booking slots. If you're a large player like this, you don't actually trade on the Binance platform like normal. You have an account manager that, anyways, all that stuff. These large limit orders have not been filled. All right. And these large limit orders have been the most reliable short-term predictors of support and resistance that I have encountered in quite some time. So I am anticipating price to actually come down here, fill these large limit orders with aggregated liquidity of about $10 million at a price point of around 64,500, as I've been calling for a while now. Clear out these long liquidations. I do not want to see $64,000 breached. I don't even want to see it get wicked below. If it gets closed below, it's over. Longs are closed. We're done. We're done. Bearish trend for quite a while, boys. Bearish trend for quite a while. 60K definitely inbound. But what I would like to see is I would like to see price come down here, fill this large limit order, sweep these liquidations, and then begin moving back up. Because if we look carefully, the max pain is to the upside. All right, the max pain is to the upside. We can even look at the liquidation heat map here, okay? Short-term max pain is to the downside, all right? Long-term max pain is to the upside. Now, we'll get rid of the large limit orders, and we'll actually throw the footprint chart on, all right? And we'll just analyze this. As we can see, these orange bars are order flow imbalances where the asks significantly overpowered the bids. In other words, this is where aggressive selling came into the market. And this is where aggressive selling came in. And one of the theories of kind of footprint trading is that price wants to go back and tap those or fill those imbalances. Kind of like the idea of a gap up in the stock market. Price wants to go back and fill that gap. We can see the areas where aggressive buying has come into the market. Of course, at our current price low of around $64,000. Aggressive orders also came in around 64,500. They came in at 64,650. And of course, they've came in most recently after this plunge back down to the support level and this push back up. Aggressive buying did come in around 64,700 to 800. All right. So we do have support below us. We do have aggressive buying occurring. What needs to happen is we need to see some volume on these bullish movements. They need to become not retracements. They need to become not the secondary movement and the primary movement. They need to become the primary movement, and we need to see a bottom. If you start seeing us push past and take out these previous aggressive order sell imbalances, and the first one really starts at 65,300, then we can actually start to target things like 67,000, 68,000. There has been a lot of exchange inflows, a ton of cryptocurrency, BTC and Ethereum, moving on to the major exchanges. In fact, earlier today, I saw $1 billion in one transaction going to Binance. Yikes. Okay. Absolute yikes. All right. You don't send your crypto to the exchanges to buy, you send your crypto to the exchanges to sell. So certainly the bigger players are gearing up for a movement down. We are going to have that movement down. I do not believe that over the next 2 weeks, this level is going to hold. I don't believe maybe for the next week that this level will hold. But what I would like to see before we make that movement down is you have to understand, when you see hundreds of millions of dollars move onto the exchanges, you're like, oh my God, we're going to crash right now. Maybe, but they don't want to sell at this price. They want to push price as high as they can. All right. They're going to manipulate futures up as high as they can, and they're going to sell on spot. That's what they're going to do. So I'd like to see, and that's why my short-term bias is bullish, I would like to see them push prices up back above 67,000, closer to 68,000, so that they can unload spot at a much better price and then begin pushing price down. So we can go down, retest 60, and then from there, we'll see if we are going to descend lower to 55.50. That doesn't mean the bull market's over. That would be a nice, good, healthy retracement for cryptocurrency. All right, so let's just look at this. So we are in the process. We're about to see a 2155 daily exponential moving average cross under. And if we actually go and look at what are average retracements for bull markets, well, they're 30% retracements. They are 30% retracements. All right, so if we actually got a 30% retracement from the high, that would put us down to 51,000. There's nothing scary about this retracement. There's nothing scary about even a smaller retracement, something like a 22% retracement, taking us back down to the daily 200 exponential moving average. There's nothing scary about this, all right? Those are going to be buying opportunities for the next leg of the cycle. But certainly in the medium term, we are going to be descending lower. 60K is almost inevitable, and 55.50, we'll just have to see what momentum happens when we get there and what the buys and the sells look like at this point in time. But for right now, I would be especially cautious. I would absolutely be sitting in cash. I only have a 2% risk long on with this trade on leverage futures. And once I see price hit something like 67, 68,000, that's when I'll probably put the trailing stop on. I'll ride price as high as it goes, but I'm not anticipating that we're going to break to the upside right now. I am anticipating that we are going to break down based on all the exchange inflows that I'm seeing. So again, just quick update, guys. I'll try to be putting these out more frequently. Right now, I'm currently in the process of recording lots of pre-recorded content for you guys, covering all the basics of technical analysis in crypto trading fundamental analysis, everything that you guys need to know. And we're going to build up playlists so that newer traders who are coming in can take advantage of these and jumpstart their education in cryptocurrency. Thank you guys for watching all the way to the end. Make sure to like and subscribe for more great content like this. Shout out to all the YouTube channel members, and please join the channel as a member if you would like to support us making this free content for you. Of course, we are launching our Crypto Trading Academy the first week of July. The wait list is filling up and we are going to be running out of slots. So if you guys are interested in that, the link is down in the description, as well as the link to our current Fairdesk trading competition, where they're giving away up to $50,000 in prizes to individuals. So check that out, trade safely, and I'll see you guys in the next one.